Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading. I was in a Master Trader class last night, and we were analyzing Regeneron here. This is REGN, and we were discussing whether or not it was a good buying opportunity above resistance. And I was teaching the bullish breakout pattern, and one of the things that we didn't cover last night, but we've been talking about in Master Trader, is the indicator RSI. RSI stands for Relative Strength Indicator. What it's really helpful for is to help us identify a breakout, because when it comes to breakout patterns, the one question you always have is above this resistance here at the 437 mark, above resistance there, do you have enough run? Do you have enough room ahead of you to continue for it to run, because the stock is breaking out, which means it's already moved up quite a bit? Well, RSI is a wonderful indicator to help us identify just that. Do you have enough room to run? Now, what RSI measures is the magnitude of the upward movement in prices versus the magnitude in the downward movement in prices. So if the magnitude of the upward movement in prices increases over the downward decreases in prices, RSI is going to continue to go up, up, and up. If on the flip side, the downward movement in prices is more than the upward movement in prices, then RSI is going to go down, down, down. So it's basically comparing the relative strength in and of itself according to the upward versus the downward movement in the actual price of the stock. Now, RSI is an oscillating indicator between 0 and 100. The mean zone is right at the 50, so the mid area is right at the 50. So what we have is above 70, right above this yellow line right here. That is what we would consider overbought, which would tell us we don't have room to run. If it's oversold underneath underneath 30 down here, we don't have room to run on the downside. So if it's above 50 going up but below 70, RSI is telling us we have enough room for the stock to continue to drive higher and higher and higher and higher. And so when we're looking at here, what we were saying is, and we were looking at the very next day right there on the breakout, RSI is approaching 70, but it's not above 70. It's approaching 70, so we're not overextended technically. We can get out there and still make the trade. We made the trade. In fact, we got triggered into the trade today because of what happened. So if you actually bring it back down just a tiny bit, back down to when we made the trade, we made the trade right there, right there. So RSI is technically not overbought. If we're only at the 62, 61 degree level. We put an order in, like I believe it was like 442 to get filled, and lo and behold, it triggered into this trade early on. We're up 10 points on the trade. Aren't you glad you were in Master Trader making that trade with me last night? And RSI just confirms we still have room to run. So let's just trail up that stop loss, lock in profit, and once again, what RSI does is it allows us the determination to determine if something is overextended or if it is not overextended. On Regeneron, it was not overextended because it was above 50 but below 70 moving upwards, and now we're still not overextended and we're running really strong on Regeneron. Hopefully you get out there and make that trade, but it will get overextended fairly quickly. And you got the same thing to the downside, by the way. Anything underneath 30 is what we call oversold. Anything below 50, above 30, crossing down, still has room to run to the downside. Hopefully that helps you with RSI. Check us over there at www.tackletrading.com and see all of the amazing things we are doing over there, changing lives, changing one financial life, one video, one podcast, one report at a time.